Hello, today is Friday, August 29th, 2008, and this is Brian Shannon from alphatrends.net. The market finished with a loss of $1.66 today on the spiders, or 1.28%. And you can see we pretty much gave up what we gained yesterday. Volume was a little bit heavier today, but still below the 20-day moving average of volume. And next week is supposedly when the bigger players return to the market, and we should see an increase in volume, and hopefully that'll do something to get the market out of this range that we've been stuck in, 126.5 up towards about 130. We're right now just about smack in the middle of that range, so the back and forth choppy action continues in here. If you wanted to be optimistic, you could say it's stabilizing. If you wanted to be pessimistic, you would look at the weekly time frame and say, this is just looking like a low volume, or a volume that's the rally has seen lighter volume as it's rallied in here relative to the decline, and that means that the most likely scenario is that a break lower, that is in the direction of the primary trend on the weekly time frame. Right now, it's still early to say it's anyone's game to win here. We have a clear level of important support that was reestablished or redefined or reiterated this week at 126.5. We had broken the downtrend line yesterday. Today we came right to that level, and we're also at that 5-day moving average. I don't think you want to read too much into that, but this level right here, 128.5, has been important, as well as 128 has been. So it just continues to be choppy action. When you really look at it, we're just stuck in a range, and maybe getting past this high right here from yesterday at about 130.5 then brings us up towards the high end of that range, and then perhaps the buyers can take control. It's tough to say. It remains a very volatile trading environment, and you got to focus on where the good action is. And today I pointed it out that the solars were and continue to be a good area to take a look at. So focus on where the action is. The USO, the oil, was up 7 cents today. It appears to be just searching for some support in here. Really, no reason to get long that I can see. Just because there's a hurricane doesn't mean you should get long. Not in my opinion. I'm not a news trader. I trade on trends, and the best case scenario you could say is that that oil is starting to stabilize in here. But I think you just want to stay away from it. And natural gas as well. Natural gas down another 20 cents today on the UNG, and this market, best case scenario, is trying to establish some support in here, and it's just range bound, but very volatile. There's just tons of volatility in there, and you've got to really, I think, understand that market and what drives it, and understand the technicals on the shorter term basis if you're going to get involved. Personally, I don't think there's any advantage to being involved. The financials were down 7 cents today. For the week, though, they started to show some signs that of stability in here. And stability doesn't mean, right now you can look at this. Is it accumulation before the next move higher, or is it distribution before it breaks down through this important level of support at 1975? Well, nobody knows until after the fact. That's the way it works. Getting back above 23, then maybe we can see a little bit further strength. But again, we've got a declining 50-day moving average. We've still got a horrible looking weekly chart. You've got to look at this as still guilty till proven innocent. If you're going to be trading the long side in here, you do it on the shorter term time frames. And right now on the 10-minute time frame, you can see we took out some resistance yesterday at about $20.60, and today we saw what was starting to be a continuation of that little trend, but it pulled back, finished with a small loss today, but still constructive on the 10-minute time frame. But I definitely wouldn't be trusting it on overnight holds for these stocks. The financials are still in a lot of trouble, but maybe they're starting to correct more through time, and the greater risks of price aren't there. Either way, a neutral market isn't a market that should be bought. Let's take a look at that. Look at what am I trying to say here? Hold on. The NASDAQ 100 was influenced, I think, a little bit by Dell. And this again shows you what kind of environment we're in. Dell had been in a nice uptrend. Yesterday, it tried to break out here, reversed. They reported earnings, and that shows, again, the danger of holding before earnings. The stock yesterday dropped below that 5-day moving average, and that's a good time to get out. From failed moves come fast moves. Overall, this I think helped weigh on the confidence of the investors in technology. We're not quite broken in here yet. We came back down to this level that's been important. In fact, the low on Monday I think was 46.12. We closed right at 46.12. We closed above the 50-day moving average, and this market is in a position where next week is going to be very important. We've still got this potential little triangle developing, a break from either way from there ought to lead to a significant move, but that's weeks out from reaching the apex of this formation. So I don't think you want to take too close a look at that right now. But the Nasdaq 100, we look in here yesterday. It the market was struggling to get above this trend line. I said it wasn't quite convinced that it was there yet, and we had some resistance at $47.30. We broke down to new lows in here today. Those lows failed to hold. It tried to rally, and I said that intraday it would be nice to see the market get back above this $46.40 level, these prior lows in here. That I think would make it a little bit easier for the bulls, but instead we continued lower, and just very late in the day we got a little bit of buying to get it back above that 46.10 level, and you can see it occurred on that 1 minute time frame on some volume. Really, we're in a tough environment. It's a trading environment. The semiconductors have an ugly look to them. They're right down at the lows of this recent uh, um, rally that failed to hold in here and back below that 50-day moving average. This is a good group to keep an eye on for some direction for technology overall. Google, we're not getting any support from Google in this market right now. Research in Motion had a tough day today, as did Apple. So there's a lot of maybe warning signs out there. I wouldn't call these stocks broken yet, but risks still remain very high. You want to stick to the trending ideas, long or short, and be ready to move to the sidelines real quick when the market tells you to do so.